doing. Because what we are, whenever we are planning for this GST lecture series, and this one speaker is pending for this topic, and we have suggested by someone that you can ask to see a Venugopal Gella from Bangalore.
Okay.
So Sailendra Saxena sir immediately contact you, and you could arrange for it, sir.
Very nice of you, man. Very nice of you.
Okay, sir. We should we start?
Yes, sir.
Okay. First of all, very good evening, member. It is indeed a privilege and pleasure for me to welcome each and every one of you. On behalf of VKCP Study Circle, I, CS Sanjay Saradia, a very warm and hearty welcome you all. We start this session with ICI motto song. For that, I will request all members to put your hand on your heart.
Yeshasuteshu jagrati Yeshasuteshu jagrati Kamam 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 Pursho nirmimanah Tadev shukram Tad brahma Asmin lokah shataha Sarve taduna Etat
Thank you all. Today we are gathering for meeting which is on the topic of return and assessment under GST. We'll take our today's guest of speaker, Venugopal Gella ji from Bangalore. Sir, we all, the member of VKCP Study Circle, acknowledge your presence. Now I invite CA Ketan Gadia ji for welcome speech of our speaker. Please, Ketan ji, mic is yours.
Thank you, Convener CA Sanjay Saladia, Deputy Convener CA Arun Viradia, and our today's guest of speaker CA Venugopal Gella ji, and all the past convener. It gives us an immense pleasure to welcome our today's guest of speaker CA Venugopal Gella. Members, I would like to mention that in this coming year we are also going through this online Zoom webinars, and we have opportunity to meet the speakers from across the country. And whenever we are planning this GST lecture series, very good help by Dr. Sailendra Saxena ji, and for this particular topic and they have suggested our name that C. Venugopal Gella ji should be the speaker for this particular topic. So we have invited sir. Sir has a very busy schedule because this is his second lecture today, and he's all immediately after 6:30 he is going to deliver a lecture at Ahmedabad branch virtually. So we are once again very heartily thanks to our today's speakers, and on behalf of VKCP we are warmly welcomes to you. Thank you. Over to you, Sanjay bhai.
Thank you, Ketan bhai. Nowadays, filing of return in GST is a headache, and chances of notice came for the same is too high in our professional practice. It is more helpful to practitioner to know how file data of return and how we can avoid future obstacle related to filing returns and assessment under GST. We learn all from our today's learner speaker and today's learner speaker Venugopal ji. Now for formal introduction of our speaker, I would like to call CA Divya Gilani ji. Divya ji, is mic yours.
Okay. Good evening all. Thank you, convener, for giving me opportunity to introduce our today's guest speaker, Mr. Venugopal ji. CA Venugopal ji is practicing chartered accountant as a partner in measures Venu and Vinay. Sir has qualified his CA course in the year 2002 by securing 45th rank, All India rank. He has also completed various other certificate courses, namely DISA, CISA, courses on business valuation, course on internal audit, course on fraud and detection and forensic account. He has also completed a one-year course from IIM on data analysis and business intelligence. He is an active speaker at ICAI on GST, especially on technology and its implementation challenges. He has authored various industry-specific handbooks on GST. He has contributed to the technical guide on GST audit released by ICAI other publication materials. He conducts workshops on filing returns with ease use of automation. He has developed a lot of Excel-based free utilities on GST like JSON Reader, creating JSON files, GSTR validator, composition versus regular benefit analysis, GST impact reader, real estate project switch decision analysis, GST audit working paper tool, etc. He is a GST faculty for ICAI and conducted various workshops and webinars. He advises on technology for GST implementation and integration of accounts and return filing utilities. His other areas of practice include design and development of internal controls and process documentation, consulting in ERP implementation or migration, management consultancy for business analysis and growth and design of management information system. He conducted various workshops for corporates on use of technology, improve efficiency at work using Excel, building automated reports from accounting and financial applications. He was behind in the development and managing of cloud applications like TaxSmile, InstaFinancial, and others. Now I hand over mic to our learned speaker, CA Venugopalji, to enlighten on the today's topic of return and assessment procedure in GST.
Thank you, Divya madam, and for
Welcome.
your introduction. So, with regards to the today's topic on returns and assessments and procedure in GST, if I would have been the speaker on this subject, let's say 3 years back, I would say you would have got the best of the knowledge and understanding on returns. But today, it's over 3 years we've been filing returns, and more or less all of us are on the same page. Honestly, specific to the topic returns, there is nothing much I think I can add value, but let us keep this as more as a discussion point, and feel free to interact and give your answers and questions in the chat box. To begin with, let's look at what is a return. Now, we know GSTR 1, 2, 3, 4, and it is titled as GSTR. So, if I am audible clearly, I want you to type in the chat box what is GSTR means. And you have to pardon, I'll keep on engaging you, disturbing you to do some activity. So what does GSTR stands for? So Ketanji says goods and service tax return. So most of the people are clear that the R stands for return. Usme kya badi baat hai? Now, parallelly, I would request every one of you to keep an act with you, or you have the online referencer alongside, and make some notes, and let's discuss. Okay. If that is so, let's look at what is a return. Now, so there are various types of returns under GST. All right. So there are returns for inward, outward, and various things that was originally envisaged, right? So we have GSTR 1, 2, 2A, 2B, 3, 4, 5, 6, 7, 8, 9. This is still exists in the law. It's not that we do not have GSTR 2 or GSTR 3, nor GSTR 4. Some of this, what you are seeing in the thing, is it's not that it is not there in the law. If you agree with me, Can we say these as the GST returns? Of course, we can add GSTR 10 and 11 to it. So if you feel that, okay, these are GST returns, type it as yes. If you feel no, type it as no. So these are the returns under GST. If you agree with me, of course, you can add GSTR 10 and 11 also. But if you agree with me, you can type it as yes. Else, you can type it as no. छोटी सी बात है. It is a simple yes and a no. So there's nothing thing. So I presume Y means yes and not questioning me. ठीक है. So most of you are in concurrence with me. Now let's look at the definition of return. Go to 2 subsection 97 of the law, which talks about return. So this says return means any return prescribed, or otherwise required to be furnished by or under this act or the rules made thereunder. So something which is prescribed as a return. Please note, it should be prescribed as a return or otherwise required to be furnished under this act or the rules. Now, so amongst GSTR 1 to 11, what is going to be a return? Will everything be a return, or is there a difference between a statement and a return? If you refer to section 37 of the Act, which talks about statement of outward supplies, and section 38 statement of inward supplies, would GSTR 1, 2A, 2B, would they be a return, or should we restrict the word return? And I will also tell you why I am stressing upon this. Should we restrict the word return to GSTR 3B, GSTR 4, GSTR 9, GSTR 10? In fact, in your state of Gujarat itself, Gujarat High Court, there was a petition which was filed whether or not to consider GSTR 3B as a return. In fact, GSTR 3B itself was not to be considered as a return. Writ was filed and by Avinash Bhai, Aap and Co. So now considering that, can I restrict the definition of the return only to the 4, or GSTR 1 to 11 would be return? So now what do you see? Is the return is subsidized to the smaller portion, or everything is a return? Just because there is a word GSTR 1, don't go by it. It's just the title. If you go through the definitions under the law, there is no way it is defined GSTR means goods and service taxes return. It's just that the form name has been given as GSTR 1. Having said that, can I now say return means only this? So do you agree with me that return means it is only GSTR 3B, 4, 9, 10? It's okay, quickly if you can type. So we will keep it more interactive. Let it be more thought provoking, because ज़्यादा कुछ नहीं है रिटर्न्स में डिस्कस करने के लिए. हर महीना आप तो फाइल ही कर रहे हो. In fact, you might be more detailedly clued in than me. Yeah. So someone is saying technically yes, GSTR 1 to 11 is not a return. Only 3B, 4, 9, 10 would be a return. Okay. Now, how does it matter? Does it really matter? Couple of things we should also be knowing is it would be mattering only when we get into the litigation. When it comes to the aspects of the litigation, literal interpretation of the act is must. Okay? So let's quickly now. So the important things what we are required is only 1, 3B and 4 aspects. I will not get into details of it. I'll only touch upon a couple of points around it. Starting with GSTR 1, which is section 37.1 read with rule 59. Now, in rule 59 and 37, till 1st April 21, we had this concept called GSTR 1 monthly and GSTR 1 quarterly. Now that has been split as GSTR 1 only monthly, and for a quarterly filers, there is no quarterly GSTR 1. It is like intermittent months. It has been given as information furnishing facility IFF, and then we have GSTR 1 in the last period. And in the last period, so if we talk about April, May, June, we will be filing IFF in April and May, or we would have already done this in Jan, Feb, March. In Jan and Feb, we filed IFF, and in March, we filed GSTR 1. But while filing GSTR 1 in the month of March, we did not fill every information back again. So the information of IFF was carried to the month of March. Only the delta figure, the differential figure, has to be filled and updated in the month of March or every quarter that is ending. The question that comes to everyone is, what is the information that we need to furnish under GSTR 1? Firstly, it is the turnover that we need to furnish. The common mistake that happens in furnishing of the data in GSTR 1 initially, especially, is reverse charge liability. Even today, there are some people who make mistake in reporting of reverse charge liability. So question to everyone, does reverse charge liability would be reported in GSTR 1 or not? If reverse charge liability to be reported in GSTR 1, type as yes. If reverse charge liability not to be reported in GSTR 1, type it as no. Okay. Nareshi, I got no. Yes. Arunji says no. It's okay. Everyone, just on your phone, type yes or a no, yes or a no. So Vaishali says yes. Reverse charge liability to be reported in GSTR 1. Okay. Now, to be precise, what I have reported as a turnover, which is reverse charge, is reverse charge outward turnover and not inward liability. So still there are some people who makes a mistake of reporting of reverse charge turnover in GSTR 1 for the purpose of liability computation. Please note, what we report in GSTR 1 is only what we report in GSTR 1 is only outward reverse charge on which the recipient pays the taxes. I, as a supplier, I need not pay any tax, but still I have to report in my table 4B of GSTR 1. The next question is with regards to taxable turnover and an exempt turnover. I am making a supply to a registered person. I am making a supply to a registered person, and such supply is exempt. I am registered person here in Bangalore, and Arun Viradyaji is registered here in Surat, but I am selling him rice. I am selling him rice. In which table under GSTR 1 I should be reporting it? Supply of an non-taxable item. In which table under GSTR 1 it would be reported if it is made to a registered person? We have 4A B2B forward charge, 4B B2B reverse charge, 4C supply through e-commerce operator, table 5 B2C large, table 6A exports with without payment, 6B supply to SCZ with or without payment, 6C your deemed exports, 7 is B2C, 8 is exempt nil non-GST. Then we have 9 amendments to 456 and debit note, credit notes. 10 on amendments to table 7 B2C supply. 11 which talks on advances. Now, question is, I am making a supply to another registered person, which is an exempted goods. In which table I would be reporting, whether it would be in 4A or in table 8. Okay, so majority of the people are mentioning it as 8. 8 is the right answer. But however, the most of the time people do report this value in table 4A. Do report this value in 4A. Is it wrong? Definitely not wrong. Now, what is the issue in reporting in 4A? The issue in reporting 4A is the likelihood of inviting a notice. Now, why is the notice and what is it? How is it concerned? Under GST, you would be not surprised, or you are by now aware that a lot of notices are issued by various authorities automatically. In fact, sometimes you prepare a reply and go, the officer would be surprised. Okay, did I give this notice? It's okay. Take the reply. Most of the notices are system driven. System automatically marks the notices. Now, you
Excuse
are
me,
dealing.
sir.
Yes.
Sorry, sir. Sir,
Yeah.
your PPT is not visible.
Oh, is it? Oh, sorry. Okay. Is it visible now?
Yes, sir. Yes. Okay.
Sorry. Yeah. So,
Continue, sir.
yeah, you are dealing with the department where the system is doing an auto computation. When it is doing an auto computation, what does it do? It looks for the assessees who are not paying the taxes as the expected scenario. Now, what does that mean? If I am selling the goods which are say at 5%, system generally calculates gross tax liability divided by value reported in 31A, whether it is expected to be at 5%, is it at 5% or not. If there is a variation, system would trigger a notice. System do not have an ability to think much. So please report the exempted turnover under table 8 and not under table 4A. Next, reporting of advances. How many of you actually promptly report advances? Report advances to be reported under table 11. Should, if I receive an advance from a customer, do I need to report here? And if it is not reported, will it be an issue? So, are you reporting advance received from customers under table 11 of GSTR 1? If yes, please type it as yes. At least you will know. If you are not reporting, you will also know, okay, whether you are in the population of not reporting or whether you are an outlier. Are you reporting advances? Now, some of you might not be actually doing the work. There's a team who under you who does the work. So I see majority as yes, some no. Now, honestly, when the team does this reporting, they have a very less clue. 9 out of 10 cases which I have seen, the section of advances is ignored eternally. And those who have been reporting advances, what they have not been reporting is advances adjusted. Now, what is meaning of advance adjusted? So there are 2 sections in table 11, advances received and advances adjusted, further amended to the advances received and amendments to the advances adjusted. Now, there is hardly any track. If you have been reporting advances, you can actually go back and check with your team, are they reversing the reporting of advances? Very unfortunately, the advances are reported, but the adjustment of advances are not reported. The adjustments of the advances are not reported. Why is it not reported? Because all this while the value which is existing in the GSTR1, even though my turnover is say 1,18,000, by mistake that dot shoot gaya and it became 1 crore, no one actually was bothering. So department was not bothering, the SSC was not bothering. So advances adjusted was not getting reported. This is something one has to take a care, because system will do an auto computation and assess your liability. This is the common mistake that happens. The next thing, table 12, HSN wise reporting. Tell me how many of you are reporting HSN wise reporting in table 12? Okay. I'm happy that many of you are reporting, but HSN wise reporting, okay, let me just ignore this. 9 out of 10 cases, HSN wise summary is showing nil. 9 out of 10 cases, HSN wise summary is showing nil. So the department said that we will make it mandatory from the month of May 2021. Does it mean all this while was it exempt? Answer is no. It is not exempt, but many people are not reporting, owing to which again the assessments are becoming little challenged. So the department is now making it mandatory to report it. Now, only thing that one should be now taking due care of, effective 1st April 21, the HSN to be reported in invoice is now at a 6-digit level for 5 crores and above. So this is something they have not been following. They have not been following. You should immediately advise the client saying that the return for the month of May, which is going to be filed in June, you will not be able to file the return if you are not filling this data correctly. All right. Moving on to GSTR 2B. Between GSTR 2A and GSTR 2B, what is the document you should consider for claiming input tax credit? Should it be GSTR 2A or should it be GSTR 2B? For claiming ITC, which document you should rely? Should it be 2A or 2B? Okay, so we have Jeet sir and Chiragji saying 2A. Otherwise, predominantly everyone is saying 2B. Okay, now the question to all those who are saying 2B, if 2B is relevant for claiming input tax credit, if 2B is relevant for claiming input tax credit, can I now, this question is only to those now who are saying 2B, can I now say do not download 2A? 2A is irrelevant document and need not be read. Can I tell my client saying that do not download 2B, ignore it, just go, sorry, do not download 2A, ignore it and continue only with the 2B. Can I make that bold statement? Because 2B is the one which is relevant for claiming input tax credit. Okay, all those who have said take 2B, but they're also saying that 2A is relevant. Now, if 2A is relevant, end of the day, it is claiming of input tax credit. And all said and done, GSTR1, GSTR3B are your intermediate returns or statements. What is the main return is your GSTR9, which is annual return. The source of information for your annual return, will it be 2B or 2A? For annual return, the table 8A of GSTR9, will it be 2B or 2A? Okay, so I got Divya says 2A. Okay, many of them are saying 2A would be the source for GSTR9 table 8A. Unfortunately, the source for GSTR9 is also 2B. is also 2B and not 2A. If that being the point, how you as an SSC can use a statement called 2A? The answer to that, I would say that 2B can be relied only for the quantum of ITC that you can avail month over month. It is not the line items for which you reconcile for the credit, but the quantum of the credit that you can avail month over month. 2B should be relied or used is what is my outer limit of claiming of the credit. For reconciliation with your books of accounts, you should still be using GSTR 2A. A very simple reason, your books of accounts are reported month over month, the year in which month in which you have made a purchase. While GSTR 2B is the month in which the supplier has filed his returns. So you can consider 2B only for the purpose of claiming of outer limit. For example, in the month of April 21, you have made a purchase worth, let's say 20 lakh and ITC on it is 3,60,000 in the books. But the eligible credit that you can claim, say in GSTR 2B, it is showing as 3 lakhs. GSTR 3B, it is showing 3 lakhs. So the eligible credit that you can claim is only 3 lakhs plus 5% of it, which is 3,15,000. So it's only to determine how much you are taking for that month. But for the reconciling with books of accounts, I would recommend you to use 2A. Now, we all know the difference between 2A and 2B. The difference between 2A and 2B is the period of filing or submission. So the cutoff date for generating GSTR 2B is if all the GSTR ones filed by 11th or IFF filed by 13th. So midnight of 13th, that is on 14th morning, it will say how many people have filed the returns and how much credit you are eligible in that month. How much credit that you are eligible in that month. So for the month of April 21, if your supplier is filing it on 10th of May, you are eligible to get the credit in the month of for the month of April itself. If the supplier is filing the return on 12th of the May, you will be eligible to take that credit in the subsequent month. Now, in GSTR 2B, you have the details of eligible and ineligible credit. Eligible and ineligible credit. Now, ineligible credit under the law, it means 17 subsection 1, 17 subsection 2, 17 subsection 3, T1, T2, T3. T1, T2, T3. On further to that, in a common credit is D1 and D2 by virtue of rule 42 and 43. Now, what you are seeing here on the screen, eligible and ineligible, does it mean is T1, T2, T3? And those who don't remember T1, T2, T3, T1 is towards non-business, T2 is towards exempt supply, T3 is 17 subsection 5 blocked credits. These credits are not eligible, they are ineligible credit. Does ineligible under 2B means, are they ineligible credits? Are they talking about 17 subsection 1, 2 and 5? If you feel it as yes, type it as yes. If you feel no, you should say why no. So according to you, what is ineligible under GSTR 2B? So ineligible under GSTR 2B. What do you think ineligible under GSTR 2B would be? If you think that I am going a very high level discussion and if you are not understanding, feel free to interrupt and ask the question. Vimlesh ji has raised the hand. You can unmute yourself and ask the questions. Okay. Anyone have an idea what is ineligible credit, ineligible ITC in 2B? Anyone have explored it? You can say no or yes. I want really everyone to be engaged in this conversation. So what do you think the ineligible credits would be? Okay. Now, ineligible means, please note, ineligible credit means as per 2B is the place of supply of the recipient is location of recipient is not equal to place of supply. You are in the state of Gujarat. I am making a supply to you. I am making a supply to you, and I am making a supply to you, and I am stating the place of supply is Karnataka. That credit is ineligible to you as per the GST and portal GST law. According to it, it is eligible for your distinct person who is there in Karnataka. So that is point number one. Point number two, even though, what is the time limit for filing GSTR1? Within what date the GSTR1 and amendments to the GSTR1 can be reported under the law? Can anyone say? What is the time limit for amendments and the reporting of GSTR1 given under the law? Am I audible?
Yes, sir.
Is the screen
Yes,
visible?
yes.
Yes, sir. Yes.
Okay.
Good going on.
So till what time I can report my GSTR1? For example, can I now report GSTR1 for the month of July 2017? Can I report July 2017 GSTR1 now? Can I file July 2017 GSTR1 now? Okay, there's one no. You can actually type the chat to everyone so that let others also get enlightened. So they are saying it is only up to 30th October. So Ketanji says no. Nareshji says yes. Okay. Now, the literal answer to it is for a period of 5 years. For a period of 5 years, you have section 73 and 74 for the assessment, and from the due date of the annual return till such period exists. If you have not filed your return and your registration is intact and it is not cancelled, you will be able to file your GSTR1. You will be able to file your GSTR1. So standing today in the month of May 21, I will still be able to file the return of July 2017. I'm talking about sales invoice, forget credit note, 34 definitely prohibits, but still I will be able to report. Oh, if I will be able to report, what happens to the recipient credit? Anything you are filing after September due date is like corrections. Okay, amendments to GSTR1 should be maximum done. Section 3710 proviso says by September. So if you have made any correction, it should be corrected by September. If that has to be corrected by September and you are correcting, say, in the month of October, November, December, would system permit you? Answer is yes. You will be able to make corrections till December because they are quarterly filers and we have GST law and GST law. The answer to it is, if there are any returns that are getting filed after the due date is over, system marks those credits as ineligible for the recipient. System marks them as ineligible for the recipient. That's another point you should be knowing. So ineligible means your place of supply is not matching, or you are making sure that the returns are not filed in due date. Next, I'm not sure how many of you have seen your GSTR 2B. At the end of each table, you have a positive value and a negative value. you have a positive value and a negative value. What is the difference between a positive value in 2B and a negative value in 2B? What is the difference between a positive value in 2B and a negative value in 2B? Okay. Imagine you are the recipient, I am the supplier. In the month of April, I have made a supply to you. In my April GSTR1, I have reported it. It has come as a credit to you in the month of April 2B. You have returned back the goods to me. In the month of May, I have issued a credit note. In the month of May, I have issued a credit note. That again gets reflected to you in the month of May GSTR2B. But credit notes are reverse in nature. They reduce the value. So the net available credit for you is going to become negative. Net available credit for you is going to become negative. Contrary, I have made a supply to you as 1 lakh and ITC for it is 18,000 rupees. You have availed the credit. But actual value of supply is, say, let's say 10,000 rupees and 1,800 is the tax. I realized that, okay, I have excess reported in GSTR1. What will I do? In the next month, I will go to the amendment section. I will only reduce the value, meaning I will select that invoice. It will show 1 lakh rupee. I will change that and put it as 10,000. What will happen to you? It will come to your GSTR2B as an amendment. It will come to your GSTR2B as an amendment. Again, that is a negative in nature. So you should be knowing what is the credit that is eligible to you, what is the credit that is not eligible to you. All right. One good thing with GSTR2B, which was not there all this while, and including GSTR2A, the ITC on import of goods, was not available all this while. If you have been finalizing GSTR9 for the financial year 17-18, you had no mechanism to audit whatever is the value which is reported under 8E, the 6E import of goods. So bill of entry, you go to IceGate portal, it is not visible. But government now, retrospectively, if you download GSTR2A, the value of the import of goods would be available. Please download and use that for reconciliation. Next, ITC reversal is others due to credit note and amendment. It is credit note and amendment. Let us look at how do I report in my GST. Okay, let me move to GSTR3B and let's discuss in GSTR3B. What does the date 3B comprise of? 3B comprise of my liabilities auto-populated from GSTR1, ITC auto-populated from GSTR2B. It is a pre-filled document with a chance for you to make an editing or correction, but any correction beyond that 5%, it will become a red. So, but doesn't mean that you should not do, you can do it. There are various tables that you will be reporting under 3B. Basically, table 3 talks about the liability and outward. Table 3 talks about liability. So the outward supplies on account of taxable is reported in 3.1A. This is domestic and SEZ, and outward supplies on account of exports is reported in 3.1B. Exempt and nil is reported in 3.1C. Non-GST supply is reported in 3.1E. So non-GST supply is reported in 3.1E. Now, the question to you, all of you, is, if the values which are coming here are from GSTR1, can I make any correction in table 3.1 A, B, C, D, E? If yes, why? Why would one make a correction in table 3, liability table in GSTR 3B, the value that needs to be reported for filing of GSTR 3B. Can I correct 3B? Answer is yes. If yes, why will you correct GSTR 3B? RCM credit, beautiful. I'll say RCM liability 31D is liability on account of inward supplies. It is not there, so you will be correcting it. Then because of B2C sales, Bhaveshi, I would say under 3.2, B2C outward, state-wise, rate-wise, I need to report, but otherwise 31A captures B2C also. Technically, you have to prepare GSTR 1 minus GSTR 3B every month. If GSTR 1 and 3B every month is not matching, if it is not matching, that means the source data which you are taking for consideration of your liability is wrong. In my personal view, whatever value which is there in GSTR 1 should be the value in GSTR 3B. If it is not there, you will have a problem in your annual return. Of course, there are ways to adjust it and correct it, but let us not get into that. Now, important point of discussion for today is table 4. Table 4, which is eligible input tax credit. Table 4 has 5 subtables. Table 4 has 5 subtables. 4.1a is import of goods. 4.1b, 4a1 is import of goods. 4a2 is import of services. 4a3 is reverse charge liability. 4a4 is ISD credit. 4a5 is all other credit. That is what we will be reporting. Now, have you ever worked out what are the values that would be coming under 4a4? Under 4a4. I'm just making a statement which is more in a cryptic form. I'm just copying and putting a data which is more in a cryptic form, that the value that needs to be reported under 4a5 is the summation of various items. There is a summation of various items. So you should find a mechanism wherein by the way, basically, if you have to avoid litigation, you should also think the way system is thinking. The way system is thinking. For example, if I have written here B2B RCM N, means it is not an RCM, it is a forward charge B2B. ITC availability is equal to yes. So in your GSTR 2A or 2B, when you apply filters, you will find whether it is RCM, there is one column, ITC availability, one column. You should take that. Then there is a CDNR, credit note, debit note section. You will only be taking debit notes. Credit notes are a reduction items. Credit notes are reduction items. Then amendments to B2B, amendments to credit note and debit note, you will have to take a delta value. You will have to take a delta value. Now, is this necessary for a person under who is doing a compliance? क्या ये सभी करने की जरूरत है? The answer is yes. You should, and it sounds complicated, but if you just download it and put a formula every month, so this is the value that you will be automatically deriving how much you should be taking. In fact, I'm not sure how many of you have paid attention to auto-populated GSTR 3B. When you download your auto-populated GSTR 3B, it will be showing that how they are arriving, how they have arrived at. So you should be having a value for reporting. The only point which I will leave it to the user how they would want to report it on the credit note section. Some users report credit note net of value under 4A5, and some users report the credit note value as a reducing item under 4B2. My personal view, credit notes report under 4B2. You have already taken the credit of it. Do not disturb the credit notes. The credit notes to be reported under 4B2. Otherwise, you will not have a method to reconcile what is the net credit that has been availed. So with this, I conclude GSTR 3B. Any doubts on GSTR 3B so far? Okay, friends, I am not talking anything on the basics of GSTR 1, 2, 3 because that is going to be, you have been already knowing all the tables. Next on the composition, there are only few dealers who are there under the composition. However, the only thing they should be filing is GSTR 4 annually once. GSTR 4 annually once. However, every quarter they have to make the payment of taxes. Like how GSTR 3B, a quarterly users, every quarter they file GSTR 3B, but first month and second month they file the payment of taxes under PMT 06. Likewise, they do it. I don't see any challenge here. And it's just that you have an opportunity to correct whatever is the value which you are returning, replying here. Unfortunately, the only the difference in the law versus GSTN is in the law, GSTR 9A is not discarded. It still exists. But however, for the purpose of composition dealers, GSTR 4 is considered as a quarterly filing, as the annual return. GSTR 4 is titled as annual return. In my view, it is a return filed annually. It is a return filed annually, but it is not a annual return. GSTR 4 is a composition dealer return filed annually, but not a annual return. But however, the liability to file GSTR 9 up to turnover of 2 crores doesn't exist. 9 or 9A doesn't exist. And the composition dealers have a turnover less than 1.5 crore. So there is no contradiction as of the now in the law. Okay. So I have only touched upon important sections. So the important returns, so that we can spend some more time on the assessment. Any doubts to anyone on this so far? Can I move to the next point, assessment?
Yes, sir. Yes.
Yeah.
Any
Okay.
member have any question? Please unmute your mic and ask questions, sir. Continue, sir.
Okay. So the next topic. Ah, sir.
Continue, sir.
So now assessment 2 subsection 11 of the Act talks about assessment, and it says assessment means determination of tax liability, which includes self-assessment, reassessment, provisional assessment, summary assessment, best judgment assessment. So assessment means determination of tax liability. You are assessing what is your tax liability. I will be spending very brief on types of assessment, and I will spend time because that was also when I was speaking to the organizer. They also said that what is that one has to take care when the notice comes. Okay. So first and foremost, we have an assessment which is done self by the taxpayer. That is self-assessment section 59. Now, whenever you have a doubt on valuation, you are applying or the rate of tax. Please note section 60 is not an alternative to advance ruling, but there are situations where there would be, owing to complication into the nature, you would want to resolve to a provisional assessment, and the whereby you will pay the taxes in kind of on a provisionally assessed, and finally it would be reassessed by the office. And very important section is section 61, scrutiny of returns. This is what we will commonly face. If you don't file a return, you are registered but not filing the return, then comes a best judgment assessment by the officer under section 62. You are not even registered, you are an unregistered person, then you will be assessed under section 63. Then there is a summary assessment. So this is what actually there in the definition under different section from 59 to 64. I'll briefly touch upon this section and work on what is that you should do when you get a notice. First, what is your self-assessment? GSTR 3B, DRC 03. These are the two things which you are self-assessment. Whenever you are making a liability of what tax to be paid and you are voluntarily paying the taxes. You are voluntarily paying the taxes. GST is all about self-assessment and voluntary assessment. That is all about the self-assessment. Now, what is the importance of it? The importance of it is the until unless you receive a notice, unless you receive a notice, where will you get the notice for? You might receive a notice for scrutiny of returns, and the time limit for getting this notice, because this will determine the tax liability, you have the 3 years time limit. So until unless this happens, it is deemed that you have assessed your taxes and you have filed your returns, and there stands no other liability, and there stands no other liability. What is a provisional assessment? So provisional assessment, whenever there is a doubt on valuation, so a taxpayer makes an application to the assessing officer, to a proper officer under ASMT 01. Looking at that, proper officer can call for additional information on ASMT 02, for which you will give a reply under ASMT 03, saying this is what the information required for provisionally assessing such a transaction. Basis that he will give you an order on a provisional basis, and you are asked to furnish a bond or a security, so that that much revenue is intact. That much revenue is intact. Once that is done, within the time limit which is specified, the proper officer will do a final assessment and issue ASMT 06 notice for final assessment. And after the assessment, he will do a final assessment under ASMT 07. Once the final assessment order is released, you will be paying the taxes again using GSTR 3B or DRC 03 based on the time periods, whatever which has happened. And you will make an application to release your security or the bank guarantee. And the proper officer is going to release that security or the bank guarantee. Not many have explored this, but please note, this is not an alternative to an advanced ruling. This is just owing to valuation. Then comes the assessment of your non-filers. You have registered, but you are not filing. You have registered, but not filing. Now, the common question is, why are you not filing? I do not have working capital to pay the taxes. Department has not given me a provision wherein I can disclose my liability, saying that this is my liability. I will pay you whenever I have money. I will pay with the liability. Department has not given any provision like that. So owing to which I will wait till the money comes to me. Now, whenever you are not filing, the officer resolves to a best judgment. Best judgment means it is worst judgment. Because in his view, in the officer view, when the officer starts making an assessment, he will see India with a very good color. He feels that month over month, please note, month over month, you are progressing at the rate of 14%. He keeps on adding revenue to it, and input tax credit, he doesn't pay cognizance to increase in ITC. Since you have not availed, there is no ITC that is available to you, and he makes an assessment order and gives it to you. Whenever you get an assessment notice under section 62, please note, you advise your clients that whenever you get a notice, please run to me, and you have this 30 days window, beg, borrow, whatever, file your return. Once you file it, it is deemed that the order has been withdrawn. And if you are not doing, there is no way the liability gets created. You got to go to Commissioner Appeals to make the order withdrawn and get the reassessment done, because the proper officer do not have a power to go for reassessment. Same goes to section 63 also. 63 makes a deemed assumptions. For example, you would have seen most of your SSCs have received service tax notices. 26 years में इतना है. Doctors, lawyers, sports personnel, because services by sports person to sports body are anyhow exempt, or the one who is receiving sponsorship services, all of them just get a notice saying that अच्छा आपका इतना liability बनता है आप pay कर दो, and why penalty cannot be invoked, all those sections would be quoted and given. So this assessment also, the officer has the 5 years timeline. Whenever we see a timeline, the timelines are linked to not from the end of the financial year, the timelines are linked to the due date of filing of annual return. Due date of filing of annual return. So what is that you should be doing whenever you get such a notice is you got to again advise the clients that, see, anything which is stitched in time, you are avoiding many. If you do not attend in time, then you are inviting a lot of problems. Under GST, please note, under GST, cost of non-compliance is much higher than cost of compliance. So you should always advise the client saying that if you have to comply, you have to pay me for reviewing and seeing everything is correct. Otherwise, that every time when a notice comes, I have to go to the officer wouldn't be available. You would be charged that which is very higher than every month paying me a fixed retainer to just to check whatever your accountant is doing correct or not. You should advise it to the SSC whether he reasons or not, it is left to him. Then comes the summary assessment. Please note, summary assessment is done only by the permission of the joint commissioner or additional commissioner, where the proper officer has a doubt and he feels that, okay, this guy is going to run away, just to protect the interest of the revenue. He would bring that if this is the guy who is doing a bill trading or whatever, he just wants to ensure jitna rahega, he will take over. As of now, I haven't seen summary assessment notices which have come to me, but there are a lot of judgment notices that have come. What is that when you get a notice, what is that you have to do? Let me actually go to the another document. Yeah, what is that when you get a notice? What is that you should be doing? First, check if it is central authorities, whether DIN exists or not. Now, many of you might be advised that, okay, agar DIN nahi hai, to usko phaad dijiye, put it into dustbin. Now, that's your personal call, but I would specifically say, consider as if DIN exists and go through it. However, you have your right. You have your right when you are replying without prejudice to your rights that exist, which you are questioning the validity of your notice. You should, whenever you get any notice, you should check whether the notice has been issued by the proper officer or not. You check the definition of the proper officer. By the way, the proper officer, one SSC will have multiple proper officers. First, your jurisdictional officer would be state or center. Only that officer will be giving you notice. But that is the assessing officer. Under section 65, there is an officer who comes for audit. That's a different proper officer. For the purpose of such scrutiny, you might have a different assessing office, proper officer. For the purpose of e-waybill, introspection of vehicle, interception of the vehicle and inspection of the goods, you will have a different proper officer. For filing your refund, your jurisdictional officer will be issuing your refund. So the proper officers are different for different aspects under GST. So your job is to check whether the proper officer who has issued notice, is he having the right to issue a notice to you or not, is what you have to check. Second, when someone comes for audit under section 65, they would be giving you ADT 01. And after the intimation that I'm coming to the audit and the requirement information, they will do complete audit. They will give their observations in ADT 02. One moment, let me put it for charge.
Yes, sir.
Yeah. So the proper officer is different. You got to be very careful. Now, he might ask,
Sir,
yeah.
One thing I would like to draw your attention. In case of DGGI, we got the notice from Delhi, we got the notice from another regions. So it is possible they have the power.
Yeah. So certain matters have been challenged in various courts. Certain matters have been challenged in various courts. Can these officers notified under customs can be the officers under GST? Let's leave that complicated. Let's look at the simple thing. The notice for service tax is issued by your GST proper officer with the GST. Now you can also challenge whether he has the authorization to do that. Your state officer is issuing a notice for the service tax matters. So these are the things these are the things you should question at the first place. Now, the answer to the question, do they have the right? I would want to put a disclaimer saying that even though they have no right, in my personal view, when you receive a notice, if you can reply to it saying that, okay, you do not have a jurisdiction, but be aware that it will travel back 6 months later, it will come back to you with a right person. So that is a breathing time for you just to buy time and do your groundwork. You can give all your disclaimer saying that this is not a valid notice and I will not be giving it. So whenever, I'm not talking about section 65, but whenever they are coming for the audit, please, your GSTR 9, that is the final document. They may say that you did not pay taxes in 3B. You are reporting it into table 7 saying that you have paid the taxes in the next year. I will not consider that. I will again levy the penalty. He may say anything, whatever he wants to say. You got to stick to your GSTR 9 for the purpose of your assessment and audit. Generally, the difference between, if I have to talk about difference between the 65 audit and the assessment, unfortunately, the assessment, which is scrutiny of returns, GSTR section 61, GSTR 3B and GSTR 9, is not going to happen much. All the assessments might be called through section 65. The officers are not sufficiently trained enough to ask a right question or come in a right way. You might be educating them saying that, okay, this is not a valid document, valid note, and you may be returning it back. But you be prepared. Is like that is only the buying time. The officer will go back, go to the commissioner, understand what is the right document under which he has to notice and section under which he should issue a notice, and he would come back. By the time he come back, you be ready for yourself. And when I say be ready for yourself, you actually need not do anything. Prepare your GSTR 9 as per ICAI guidance note, a very beautifully elaborated document. What you should be considering in your table 4 liability and the table 6 input tax credit and your table 8 reconciliation. These tax liabilities and net ITC, how is it discharged in table 9 read with table 14? You make sure that your workings are proper. If that is done, everything will fall in place. So this document also I'll share. So this is basic information for preparing for the audit. Now, what is that you have to submit it? Most times they will be asking you, again, okay, give me your registration certificate copy, give me your GSTR 1 filed, give me your GSTR 3B filed, give me copy of payment challans. They are copy of your purchase register. They will be asking you various information. You have two choices. You can refute and say, okay, this information is already with you. I'm not going to give you. I would say put it in other way. Any information which he is already having today, you have beautiful tools that are available. On click of a button, this data would be downloaded. You share them. Okay, this is my turnover related information. This is my ITC related information. You can dump back the information, whatever you have. He asks the trial balance, give the trial balance. You don't need to reconcile the trial balance with the MIS, which is maintained internally month over month. You just give the trial balance, and there are there are n number of ledgers. It is up to him how he would want to scrutinize it. You may not. Okay, by the way, whatever I am saying, I'm only saying out of the practical thing. He has a limited time to conclude the audit. What is, if I have to notice whatever the audits which have happened and the notices that have come so far, what is it he going to do? He for sure, he is going to derive at the tax paid ratio, meaning GST paid, output liability paid over in cash, paid in cash divided by total liability. It will give me what is the profit margin of the business. And that is what he makes as a benchmark. Okay, you are into trading, you need to have 4% profit. Okay, you are into manufacturing, you need to have 8% profit. You are a retailer, you should be having 12% profit. So he makes his analysis in that way, and he will come back. Now, your job is to ensure that, okay, this is what they are going to do. So you've got to have a reverse calculation of the taxes paid and have the information. So you need not resist information providing whatever is apparent on record. But anything you have to prepare and give it. He may ask you vertical wise P&L, segment wise P&L, month wise P&L, or classification. I am dealing recent advanced ruling. I am dealing in silver. I am also dealing in castor seeds. Okay, wahan ka input tax credit yahan use nahi karna hai. So he may say various things. Now your job is to make sure that you, as is basis, you provide the information. Okay. Now why I am saying provide the information. This, it appears to be a carrot. This appears to be a carrot. But some of you would have also noticed, jo golgappe khate and the people who are interested in different types of flavors of pani puri. So one vendor garnishes his chart in this way and is giving. How people perceive matters. Your job is to give the information. Officer may expect it into be a more prepared way. It is not necessary. It is, please note, it is not necessary that you become his audit assistant in doing everything. You only have to provide him with the information which he is asking. You don't need to hide. You don't need to hide. At the same time, you don't need to explain why you have not taken the credit or why you have taken the credit, why you choose to say this is the thing. You can clearly say this is taxed only at 18%. This is taxed only at this percent. Now, at what point you are giving the information also matters. If you notice how auditors are smart, how we as a chartered accountants are, we live by controls, and we are little knowledgeable. Every time when a businessman comes asking for any doubt or help, just out of your memory, you say, okay, aap aise kar lo, ye handle ho jayega. Because we have learned many things, the trades of the trick, looking at various other businesses. We have learned from other businesses. This is what is actually going to happen during the audits. Proper officer is going to take an explanation from you, a detailed explanation from you. He will go back to come and contradict as why this is not applicable. At the first level of your, okay, there are two theories. You can give all your emanations in front and say that, okay, look, I don't want to get a notice. Here is the thing. You submit, everything is okay. But the other side officer, he is a revenue target oriented. He will find ways in whatever your documentation is. That's what actually happens in audit. if you are the one who has to do an accounting, even we will end up making mistakes. But if someone has done the accounting and we are reviewing it, then we will find the issues. So it is not necessary. It is not necessary for you to agree to the observations made by the officer. You don't need to perceive an unwarranted risk factor and saying that, okay, something is going to happen. Absolutely nothing to be worried. My personal thing at a first level, unless otherwise, by the way, after the audit, what happens? He has to issue a demand note under section 73 and 74, refer it to the proper officer saying that, okay, these are my observations of the audit. Now it is up to you, you go and assess. It's not the proper officer who is doing an audit will give you the final notice for the assessment. So unfortunately, today everything is mixed. Same proper officer does the instead of scrutiny of the returns, he says, "Chalo audit kar lete hai," and the same person is giving ADT 02 and also demand under section 73. Everything happens. You have all the rights to challenge the jurisdiction of the officer. But please note, if you are challenging it, 6 months later, it will come back in a right way. The challenging is only buying the time. You cannot be happy saying that kaam khatam ho gaya. Last thing which I would want to say in the audit is whenever you are giving any observation, please link any observation of yours, every observation of yours, link it to your annual returns. Link it to your annual returns, because that is going to be the final document. And issues that would come in HSN classification, which is rate of tax, rely upon your industry classification, rely upon the industry classification, because they are the one who are going to tell you that, okay, across industry, they are going to do it in the same way. Now, you have a choice, certain decisions you can make, or certain decisions the officer can take. Now, the decisions you can take is you can choose to keep the commissioner informed, saying that there is a harassment happening. You can choose to say, okay, this is the High Court judgment, or you can choose to say that this is the advance ruling you have to rely upon. The choice is yours, where you want to give a detailed explanation at the time of the audit, or you would want to say that, okay, whatever I have done is correct. This is as per the law. It is up to you whether you want to believe it or not. And if you do not believe it, I will be explaining it to my proper officer whenever I get a notice under 73 or 74. Please note, all notices would be issued under section 74 only. In their views, that whatever, even some 5 rupees not paid is also like a fraud. They will issue the notice under 74. So your reply should also be contradicting why it should be 73, why not 74. Next, you should be also be very careful and very careful that certain taxes which are paid under 74 are ineligible credit. The biggest, or the owing to COVID last year and this year, there haven't been audits much, but notices are going to come. I would only make a submission to you all that the notices are going to come, and especially on reverse charge liability. Many people say reverse charge liability do not follow the normal route of 16 subsection 4. रिवर्स चार्ज लायबिलिटी में जो टैक्स पे कर रहे हैं उसका क्रेडिट जब चाहे तब ले सकते हैं, जब चाहे तब ले सकते हैं. But unfortunately, the taxes you will end up paying under 74 is restricted in 17.5 clause I. You will not be able to take credit. My view, RCM liability finalized then and there and report it. You can use the table 6 for realignment of utilization of credit and liability. So GSTR 9 is your final weapon for you to reclassify what you intend to pay tax, what you intend to avail credit, and say this is what is the right thing. GSTR 3 भी तो गलत हुआ है. It's like Instead of reporting under 4A3, by mistake I have reported under 4A5, or instead of reporting under 31D, I have reported under 31A. So you can always fall back saying that this is my proper data using which I am paying the taxes. The next issue, which is open, which will again come on the liability, is on the credit notes. Most of the SSS did not disclose their credit notes in GSTR1. Credit notes, there is a separate table 9, they did not disclose. But they have reduced the liability in 3B. The officer is now going to say that since you did not even disclose a credit note, Section 34 says credit note means that which has been reported. Since it is not reported, it will not be given credit for. So you cannot reduce your liability. That is going to come. So you have to be very careful about it. Next, every time when someone comes, they will be putting you under huge pressure, saying that pay kar do aaj tax. Varna, you will have penalty, everything. My suggestion, you don't need to pay any payment of taxes under DRC 03 immediately on the audit. Let the notice come, let it be fought, then let the liability be crystallized, and you can pay the taxes. Because the payment of taxes under Section 73, DRC 03 voluntary, there is no mechanism given in the law saying that this is pre-deposit. You may report in the narration column under Section 7, the DRC 03, why you are paying is this is under protest. I am just paying it. I am not acknowledging this as a liability. You may say it, but the cognizance of it may not be taken by the officer. So you got to be careful that out of pressure are you paying the taxes, or you genuinely feel the liability. Even though if you genuinely feel the liability, get your demand note, get your assessment done, and remit the taxes. I would like to conclude with a statement saying that whatever I have said is definitely a choice for you to consider. Is this the final? Answer is no. Is this the right way of approaching the officer? The answer is no. But you are free to choose. You are free to choose whatever is the method in which you want to respond back to the officer. You are free to choose. Now, why are we putting so much stress? Is if the taxes are, if the liability is given under Section 73, at least you have the penalty taken care. But when it comes under Section 74, then the demand under 74 is penalty is equivalent to the tax amount. The worst case, the penalty is 15% of the whatever is the value which is there in the show cause notice. The best of the penalty is 15%. But if it is a Section 73 matter, there is no penalty within 30 days from the remittance of the show cause notice. So I would say that, So I would say that you take a calculative call whether you would want to pay the taxes now and wants to settle the matter, or you would want to find out you want to wait for the demand to come or assessment to come and do it. So the choice is yours, and you can take a calculative call. So far, any doubts to anyone? Okay. So the last point of the discussion from the assessment I want to touch upon, I'm sure this would have anyhow completed for you, but I would want to touch upon a general provisions relating to the notice and assessment. Firstly, you can ask for the personal hearing adjournment maximum 3 times. And officer cannot make a presumptive assumption. He has to give the facts and basis of decision. It has to be set out in order. final demand cannot be higher than whatever is there in the original notice, unless otherwise there is a reason to believe the case is reopened. So the grounds cannot be beyond what is mentioned in the notice. So during the assessment, it cannot be beyond the notice. Now, if there is an adjournment or anything under the matter is with the court or appellate authorities or anyone, even though there is a penalty that is coming in, that would be recalculated. One important point is someone I was hearing that, okay, section 73 and 74, if you read the heading, it nowhere talks about interest. It nowhere talks about interest. But a general principles in determination of the tax liability, that interest liability is payable in all the cases, whether there is specifically mentioned in the order or not. And the officer may forget the timelines. You should be keeping in mind the timelines. If it is not owing to fraud, it is 3 years. If it is owing to fraud, it is 5 years. But the notice should have come 3 months prior to the due date of that timeline. So remember those things. And you have all the rights to go for an appeal. You cannot directly approach the High Court or any, unless you complete your alternate remedies. As of now, the GST tribunal is not set up because there are no finality of hearings, appeals haven't come, but very soon this is going to happen. If the amount of self-assessment tax is paid wholly or partly, interest is payable on such tax if it is remains unpaid. Because this is one thing people were saying that 73, 74 may interest ka prastav aaya nahi hai. So it is only tax short paid, not paid, or ITC erroneously availed or refund claim. Interest ka nahi hai. So interest cannot be demanded under section 73 and 74. Answer is they can also demand the interest under 73, 74, considering the general provisions in determining the tax amount. Now, if there is a penalty that is imposed under 73, 74, then cannot be again penalty for some other provision of this act. So the 73 and 74 is the final penalty, and there cannot be any other penalty under any of the act. So I'm not talking about the recovery of the taxes or anything. Anyhow, I have shared that in the provision. I have requested the speakers, the host, for closing the session little early and having more interactive discussion with the participants. So with this, I have come to end of my presentation. So over to back to the participants for any Q&A. This, both the materials will be shared. You can go through and revert back whatever the queries that you have.
Okay, thank you, sir. Any member have any question? Please unmute your mic and ask question.
Yes, sir. Sir, my question is in regard of return. In case of builder, where to show whether it's received from member shown under table, advanced table or B2C table?
Okay. Now, a builder, there are two types of receipts which he can consider. One, at the time of sale agreement which is being made, and not even sale agreement, say at the time of booking form.
Yeah, it's compulsory because exceeding 10% whenever they receive, it's compulsory to make the sale agreement for sale.
No. That's what I'm saying. There are two types of receipts that come in. Firstly, today the builders come up with the different schemes. Today the builders come up with different schemes. Now, if you have a cash, आप थोड़ा upfront pay कर दो. अगर 40 लाख का फ्लैट है तो मैं आपको 38 lakhs में दे दूंगा. So the sale agreement says that okay, 5% on signing the agreement, 10% when the slab one is complete. So level wise you are doing it. So if you look at section 13 read with 31, time of service, supply of services, it is earliest of time of supply says liability crystallizes when you receive the money advance. But contract says the demand note will be raised if 10% has been complete. If say first floor is completed, he has to pay 10%. Now, against the demand note, please note, against the demand note, if the customer is making the payment, then it would be reported in table 7. If a customer is making the payment over and above the demand note, then it would be reported in table 11 as advance. What is the difference between reporting in table 7 and table 11? When it comes to a demand note, it is as good as a tax invoice. अगर आपने invoice दे दिया, बाद में पार्टी बोलता है कि नहीं, I do not have a cash flow, इसको cancel कर दो. Time limit to issue credit note for such supply is by September of next year. After September, you do not have a liability to, you do not have a provision to reduce your liability. But contrary, if it is reported as an advance, if it is reported an advance, there is no time limit to adjust. 10 साल के बाद भी, अच्छा मैंने एडवांस के ऊपर टैक्स भर दिया, सप्लाई नहीं किया हूं, कैंसिल कर रहा हूं. So what matters is the documentation. How well you are building the documentation is what matters here.
Sir, is there any difference if we recognize revenue under our financial statements? We are recording revenue at the time of sale deed.
If there is no sale agreement, which is unlikely, then you can report everything as advance and report it as revenue at the time of sale deed. Can you prove that there is no sale agreement? Then everything is an advance. If there is a sale agreement, then you cannot say that I will recognize revenue only at the time of sale date.
Okay. Any member have any question?
Sanjay bhai,
Yes.
I think sir has to
Yes.
go for another.
Yes. Thank you, sir. Because of sir's another session of at Ahmedabad, we go ahead for conclude our session. Now I call CA Arun Bhai Virdia for a vote of thanks. Arun Bhai.
Thank you, Sanjay bhai. Thank you, Venugopal sir. I hereby thanks Venugopal sir for sharing his excellent knowledge and expertise in the matter of return and assessment procedure in GST, which is very useful to all the members of our study circle in their practice as well. I also wish sir will share his knowledge share his excellent knowledge with us in future also. And I thank you very much, sir. I also pray for the better health of you and your family and all the members and his family also in this pandemic situation. Thank you all. Thank you, sir.
Thank you.
Sanjay.
And sorry again, the convener for rushing up some of the points, but I'll share the material. Members can legally go through.
Thank you, sir.
Thank you very much, sir.
Yes, sir.
Thank you, sir.
We will be, sir, please share us the PPT and
Yes.
okay, sir.
Yes.
Okay, sir. Thank you very much. સંજય ભાઈ નાસ્તો વાનું કેમ છે?
Just a minute, sir. Member are requested to please write down their membership number and name for attendance purpose.
Racha Katargam CP Study Circle WRC account only.
નાસ્તા નું છે
શૈલેષ ભાઈ લાકડિયા
જે મેમ્બર મેસેજ પહેલા પોતાનું નામ અને મેમ્બરશિપ લખે છે તેઓને સીપી અલાઉડ નહીં થાય અને જે
ભાઈ YouTube લાઈવ ને રેકોર્ડિંગ બંધ કરો.